Hey guys, what's up? This is Andrew for TRENDLINES.com. So sorry I haven't posted anything for the past couple of days. I was actually very busy at recruiting some traders for my project, guys. It's going to be on Discord. It's going to be amazing. It's starting actually today for those who are already on my Discord. So I'm going to tell you guys everything you need to know. But basically, we're going to have a trading team with traders where we're going to share everything, guys. It's going to be, some educational material, some information about the news, about the patterns, about some, breakouts happening, everything. And we're going to show you how to monitor the trades, how to find first the trades, how to enter them, how to monitor a full book. It's not going to be only one book. So, a portfolio basically. And we're going to show you how we apply different strategies and how we make money, guys, because this is what we are used to do. We are professional traders. So I hope we're going to make it. But usually, those things, when you do them properly, it's working. So this is my challenge for this year. And I'm so excited to do it with you guys. So let's see. But today I want to talk about AMC and let's see what the charts are telling us. So let's get into it. Alright guys, so we're here to talk about AMC, and okay, what we're having here is what we can call, I think, a complex correction. So let me explain. We had the breakout here, very clear, very clean. Everybody saw it. Everybody, here started to FOMO. I told you guys, don't FOMO, wait for the, 35, 38, 40 levels, to enter your trades. I gave you my trade was buy 35, buy 37, stop loss 34.5. So I'm going to explain why I like to use stop losses. I know that some of you don't like, but this is how I'm used to trade. But first here, let me explain what is happening. So we had this correction, ABC, after breakout. All right. So this was last week. Okay. And here it was the first information of weakness to me. So I'm posting once again on my Discord regular updates about everything that is happening, guys, on AMC, on GME, on BlackBerry, on Tesla, Fubo TV. By the way, there's going to be some weekly votes, so you guys are going to decide what you want to see. For now I'm mostly doing what I just said, but I can do whatever you want. And of course I'm going to share with you other trade ideas, and then you're going to be able to tell me, oh, we want to see this on a daily basis, and you're going to have it, of course. So here I'm sharing information about AMC, and what was happening in the past week was, a bit tough to analyze. There was a lot of noise. When you have this kind of price action, that usually this is corrective, because motive waves, they are very clean. So when something is like this, it is corrective. So here for me, it was the first sign of weakness. Then I had another one here, all right? Because what I wanted to see is something like this, a 1, 2, and then we go higher. So the first thing is that I don't like here we go below this trend line, all right? So first sign of weakness, that is starting to tell me, maybe we're not going to go to 50 right away. Second sign of weakness after this strong rebound, I think it was on last Monday. Here we went too deep for me, below 35, which is too deep. So here I started to be, kind of bullish on the very short term. Of course, I kept my stance for the medium term. But it was looking to me like this is corrective, like this is not the beginning of a third. All right. So then when you have something corrective and you want to know what it is, you guys know what to do. You go to the ELLIOTT Wave book, guys, written by Frost and Presta, and you go to what is explained about sideways correction. All right. So ELLIOTT called sideways combination of corrective patterns, double threes and triple threes. So for those who are watching my video for some time, you know that now this is the kind of usual correction that we're having. Before, in the 30s, 40s, 50s, I don't know, maybe we had only zigzags and flats and triangles, maybe, a perfect world when after one corrective pattern you knew you would have a motive wave coming, maybe. But in the real world now, what we're having usually is this kind of complex corrections. So we need to live with that. We need to know that this is happening. So once you have one here, sign of weakness, second sign of weakness, here I kind of felt that this correction is not over, and I was repeating you guys on my Discord that we're going to go to 50 next week. So it should be this week, let's see. But that's the right trade to do is buy 35, buy 37, and stop loss 34.5. Why I like to use stop losses? For the same reason that here I started to see weaknesses. If we go below that, it would be one more weakness on the path to the third wave. So if we trade below that, it's telling me that the correction is not over, you know, for some time, like that probably we're going to have something like this, and that here it would be still corrective, you know. So we would need to analyze what is happening, but this is the reason why I personally like to use stop losses, all right? Because I find levels where we should have support. If we don't have this support, it means that the buyers are not, the bulls, you know, are not strong enough yet for creating this reversal. So here my level is 35. Below 35, I am out of my personal trade, and I would wait for the next bullish signal to re-enter my position, because, you know, I have time to do that. I'm a day trader. So this is the reason why I'm doing it. Otherwise, averaging down is a very good strategy as well. Okay, so this is just the reason why I like to use stop losses. And here you can see that we went to 35. By the way, we had this discussion on my Discord, and thank you guys for creating those discussions. We were discussing here this triangle. And I said that basically you cannot start your triangle here, okay? You cannot do this, because then the E wave is, you know, going higher. And, you know, after that, you need a leg down before the move up. So it's not working, all right? This is why the triangles always start from the top. So you have first have zigzag, okay? Just like we had here. You see, for example, you have a flat or a zigzag, then any three, and then a triangle, okay? This is possible. Or a flat, a small zigzag. So here a flat, small zigzag, and here a zigzag. I think we're having something like this, guys. This is what we're having on AMC. So we have zigzag, zigzag, and here some kind of a flat, or maybe a zigzag. So it's like maybe three, a combination of three zigzags. But anyway, if you're looking for a triangle, you need to look for a triangle here. Then we start from here, and bam, we go higher. So we could have had this, but here we didn't hold at 37.5. We broke it, and we went to the next support level very quickly, guys. This is the reason why it's good to know where you have your support levels, all right? There is no need to buy 36.5, for example, you know? There is no need, because you know that most likely you will go to 35. So this is how I choose my entry levels, for example. And so here, now, what can happen? So of course, my preferred scenario, it looks to me that this complex correction has last long enough, and that it might be over. And if it's the case, we're going to have a strong bounce back. So this is my preferred scenario. But keep in mind that if we break 35, we'll probably go to 31, all right, which is the next support level. And if we go to 31, I mean, this 1-2 is not strong at all. So I would be 50-50 here. If we go to 31, 50-50, that we go to 24. So for the bullish case to stay strong, we need to stay above 35 for me. So let's see what today is giving us. But if we have a strong bounce back, it looks very good for the 50 level, where we're going to have a question. And this is why, guys, I want to show you the type of trades that I'm going to share with you on my Discord. I have actually already shared it, guys. So for those who are there, okay, so I'm just going to explain very quickly what is happening here. You know, I want to thank you, all of you that are already there, you know, my kind of early Discord members that got there for free. And I want to thank you to be there the first and to animate displays by asking questions, posting your views, your analysis, you know. And this is the reason why I give you 3 days where only you guys, you know, so for those who are not on my Discord, I'm sorry you don't have access to this, can access all my different memberships. And I'm going to explain in my Discord how it's working. For those who are not there yet, you're going to need to wait until next Sunday, and I'm going to show you guys how to get in. Okay, for now, it's only open to the Discord members. And what I shared over there already with you guys is this kind of option strategy. Okay, so let me show you. All right, so on AMC, like I said, we don't know if we're gonna go, you know, the preferred scenario is that we go to 130, all right, next month. This is my preferred scenario, but we know that we might go to 35, sorry, to 31, and even to 24, but we won't be going below 24 before next month, so basically September. So this is the reason why I have a very nice option strategy that I share with you already there, but I'm gonna explain it quickly here. So you take the 17th of September maturity, you here sell so I'm going to show you step by step how to build a strategy. So for now, your payoff is nothing. So you sell 10 put option. So your payoff is now like this. So when you sell a put, you're only gonna get the performance of the stock below the strike. So here below 24. This is why we don't care, because AMC won't be trading below 24 before the 17th of September. So this is the reason why selling those, of course there is a risk, but it's a very limited risk. You're not losing anything above 24. So then once you have sold this, you can buy, you know, some 50 strike calls, guys. And you can see that now you have this risky payoff. This is how it's called, where you basically sell the 24 put and buy the 50 call. But this still costs you $1,000. And as we know that we won't probably go above 130 before September, we can here cap the performance above 130 and make back $770. So now for only $400 spent, you can have this beautiful payoff. And by the way, guys, some of you asked me many times to get access to this spreadsheet. So I have already sent it. I will share everything with you guys, all my material. I told you I'm going to share some educational material. So this is one of the things that I want to share with you. So I have already posted this spreadsheet. You can just go there and have access to it if you are already in the Discord. And here, basically, what you can see is all the information about the strategy you want to do. So here, for example, you can see that the maximum gain is $80,000 and the maximum loss is $24,000. So you have a very beautiful risk reward. And you can also see, so the maximum loss is only going to happen if AMC goes to 0, which is unlikely, you know, almost impossible. All right. Even going below 24 is to me close to impossible before next September, of course. And so this is the reason why I think that sending the 24 put to buy this call spread for only $400 premium is a very nice strategy, because you spend $400 and you can make up to 80,000, guys. All right. So this is a very, very nice risk reward trade. And one more thing I need to tell you guys is that, of course, you spend only 400, but you can lose up to 24. All right. So you need to have $24,000 on your account. Otherwise, your broker will not allow you to get into this position. So you cannot make this trade if you don't have $24,000 on your account. And everybody don't have this. So let's just divide by 10. It's working too. Okay. So now you only need $2,000 on your account, 2,400. You can make up to $8,000. And, you know, if nothing happens, I mean, if AMC stays between 24 and 50 until next September, you only lose $40. So this is the kind of trade that I would put right away in one of my books. All right. So this is what's going to happen there, guys. You know, we're going to manage different books with different strategies. We're going to work as part of a team, as we are used to do, because those guys that have hired, that guys from the banking industry that have experience, that know how to manage a book, how to manage risk. We are used to that. This was our job for all of us. And we just want to share this knowledge with you guys, show you how pro traders are actually working. This is the purpose of this channel. This is the reason why I started to talk about, you know, what I know, what I'm doing at work. And this is the reason why now I want to grow. I want to, you know, hire people that have knowledge that even I don't have. And we're going to just, you know, share everything and show you guys what we do. And hopefully we're going to show you how to make money. You know, there's going to be few portfolios with different strategies. Each portfolio is going to be around $10,000. So this is why I want to do this. We're going to do something that anyone could do. All right. This is the project that I'm starting here with you guys. So this is the kind of trend that I would put right away in my book, guys, but we're only going to start in September. So let's go back to what is interesting here. AMC, guys. So just sum up the situation. We have weakness. All right. We have weakness once again below, between 37 and 35. It's, you know, this orange areas that I'm putting here that I don't like to see. This one was kind of expected. So fair enough. The one that I really don't want to see is this one right now. If I see it, I'm going to tell you guys what it means, but it's not looking very good. It means the third wave won't probably happen this week. All right. It's going to delay the inevitable, but it's going to delay it for maybe one more week. So let's see. I think we're going to hold above 35. Of course, I can't guarantee it. And yeah, if we trade so below, above, so we want to close above 39. Now, this is our short-term resistance. All right. Just the trend line connected between the two recent highs. So we want to close above 39. If we close above 39 with strong moves, with volumes, it's, you know, looking very good for the 50 level that we need to monitor to see if we go higher. So that's it for me. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. I see you guys.